is the Transportation ETF, and this one just started trading back in February of 2011, so this is a relatively newer issue on the market. But again, we've got this kind of a move up here, something like that. So this one is a bit more constructive, but again, it's a newer ETF, so there's not a lot of trading data here, so you can't take too much into account of the price action because it is a new issue. Next is the Materials ETF. Again, we got this up here, this down here. So we've got perhaps a possibility of making that much upside with this much downside. So the risk reward for this isn't too great. Next is the Regional Banking ETF. You can make this kind of an argument. So yeah, I guess you could say you've got this much upside with this much downside, maybe. Stochastic's crossover, on balance volume has kind of been trending upwards recently, upwards to flat. But again, it's the financial sector. I would rather have the KRE, which is the Regional Banking ETF, over the XLF, which contains more of the big banks that have headline risks, the JP Morgan, Goldman Sachs, Wells Fargo, Bank of America. That's the XLF. The regional banks are things like Comerica, PNC Financial, KeyCorp, M&T Bank, BBT, those small regional banks. So this one, maybe, if you want some financial exposure, the KRE is maybe something you could look at. XLU, and that's what I'm looking at. Okay, that not a whole lot of upside here. So I'm looking, maybe we get something down to here, and we get a bounce. Then you can go to something like the Southern Company. Let's see, Southern Company. Maybe you want to buy that. Okay, on any kind of a pullback. Okay, maybe you want to buy Southern Company. But right now, all we've got is this. So, nope, not a buyer there. Next is the home builders, and that's just, no, I don't want to buy the home builders at all. I don't care about any technical analysis on the home builders, because fundamentally that sector is entirely messed up. Next, industrials. Okay. I don't have a whole lot to say about this. This is real choppy. You can see from this on-balance volume, it was under accumulation, then distribution. I don't know. This is too choppy for me to even try and make any kind of analysis on. All I can do is when I look at stuff like the XLI, I go to the big one, Caterpillar. And that announced pretty lousy earnings. They missed big time. They were supposed to do about 182, 185 something, $1.85 in earnings. They came out with 172, and it was a huge miss. And even a lot of it was because of Bucyrus and Japan, but even when you add that back in, they still missed by 10 cents or so, 10, 15 cents. You can see the volume here, massive volume on this day. It's just not something that I'm interested in buying right now. Maybe back down at 96, or maybe the 200-day moving average. Maybe I'll buy Caterpillar there, but right now I just got to stay away from it. Maybe, if we get a bounce there, maybe I'm a buyer on the bounce. Not just a tag of the 200, but I got to see the bounce. Because again, you could just get 200 days support. You could just get something like this, So you got to wait for this and then that. And then also let's zoom in here to do candlestick analysis. On Caterpillar, you can see we've got, this was the open and the close. The open was right here, and the close was a little bit higher on the day. That's from the hollow candlestick right there. But you can see the move up intraday and also the move down intraday. These long whiskers on this candlestick, the long whiskers here, they represent indecision. When the price action closes right in the middle of this range, and when it closes right kind of in the middle of the range and you got long whiskers on either side, that represents major indecision. So the market hasn't decided on Caterpillar's earnings yet because a lot of the commentary was bullish on the Bucyrus acquisition. Caterpillar management guided up. They raised guidance on revenues and earnings for the full year 2011, but still, they missed big time. And until that gets resolved, then I got no opinion on Caterpillar fundamentally, and neither does the market, judging by this major indecision. So they're also acquiring Bucyrus and completely changing the business model. Bucyrus used to be dealer direct, so all the mining companies would go to Bucyrus and get their equipment and have it specially custom ordered. Caterpillar has, they're just a manufacturing equipment designing firm. So they design the equipment and build it, and they ship it out to dealers, and the dealers talk to the customers, and the dealers service the parts, the dealers do everything. And Caterpillar has taken Bucyrus's business model from a manufacturer direct model to their distribution model through their dealer service network. So I don't know exactly how that's going to play out for them. They're having a lot of bullish commentary that this acquisition is going to be really great for them and accretive going forward. But if they're changing around Bucyrus's whole business model completely, then I don't know why Bucyrus had that business model, but apparently it was the right way to do it. They certainly weren't as big as Caterpillar to have a dealer network, but still, Bucyrus was doing it for a reason. If Caterpillar's completely changing that around, you got to wonder how accretive and how quickly this acquisition is going to be accretive. So that's just something to keep in mind when we do our fundamental analysis on this stuff. Next, let's go back the XLI, and that was it. The XLI was the worst performer. It was down 1%, and you can see over here that it's at the bottom of our sort. Down here, and the sorting over here, you can see that the industrials were the worst performer, down a whole %. So that kind of rounds out what I've been looking at. So everything is pointing to at least a short-term top in the market. So you just want to be careful, perhaps keep some cash, and if you got to buy something, maybe it can be in something like the IYT, the telecom sector.